All right, cool. So here we go. Look, for the last, what, like 4 or 5 months now, basically since March, Bitcoin has been in more or less a consolidation, hasn't really done anything of significant value towards the overall trend. Yes, indeed, it has mattered on, on the smaller scales of things. We've seen several, 20% moves, both ups and down on both ways, which certainly do matter. But as far as just the overall analysis of Bitcoin and what it's doing, I just want to make it as simple as possible. Look, in this case, we see that Bitcoin is on a weekly time frame on a closing basis, seemingly putting in its next higher low. And so we have seen this before. In fact, last summer was a very, very similar to this, actually, where Bitcoin got into a range, basically starting about March, April over here. And it comes down, scares the shit out of everyone, puts in a low, pops back up, comes back down, sets in an ever so slightly higher low. And yes, this is indeed a higher low. It's higher by about, I think, $20 or so, but that's high enough. And in this case, we have a little bit more of an obvious one going on over here. In fact, if you are even just referencing the tools of this course, you can see that we have the crown cross the upside. The yellow is above the green. And what do you know? Weekly BBWP is at extreme lows, and weekly stochastic oscillator is going to have a chance to actually continue on to the upside at the end of this week. It will be seen whether Bitcoin actually clears 64,200 or not. Otherwise, it might take another week or two on top of that. Personally speaking, I do think that this will continue to kind of eat up time between now and probably midpoint to end of September. But as it stands right now, heading into especially tomorrow's event on Friday, that you're going to get Jay Powell speaking for the Jackson Hole event and all that. That's going to be a nice little catalyst for markets here. And I think the general anticipation here, at least, in the way that I'm looking at things, most markets are setting for some upside. So for me, the big area for Bitcoin on sort of a little bit of a lower term time frame right here, let me just go back to my usual view, is simply just getting back above or closing back above the Thursday, 8th of August highs. If you see some like that, this is confirmed as the next higher low, both on a daily and on a weekly, and very likely you're going to see Bitcoin run, somewhat quickly, I suppose, towards 67,000 bucks. But of course, we're probably waiting around until tomorrow. Again, about 62,500 is the number that you're looking at right there, closing above there, and then you can kind of solidify that in as the next major pivot. And again, I still would kind of expect things to get boring from here. It just is what it is in the summer, as typically August is a very, very boring month. But it sets up Bitcoin for a nice base to kind of launch off of probably end of September, honestly. I mean, this market still has just time to spare, just time to chew through. And that's going to look like that slow sideways and upside grind. So I think that's what we're getting ready for here. Kind of funny to see this again. And I think actually it would be good for me to just speak towards this really, really quickly. 3 weeks ago, we had that 5th of August, Monday, the 5th of August, the one-day bear market of 2024, where Bitcoin and all markets came down significantly. This is why it's really important, at least in my opinion, to be looking at things on a weekly, or not necessarily a weekly closing basis, but a closing basis, in this case, on a higher time frame, like a weekly for Bitcoin. And just, if you just like a quick look at traditional markets, what I think is incredibly revealing here is, when we go to the monthly look, keep it in mind that there's really only 8.5 trading days left in this month to go for traditional markets. Look at the monthly. Yes, it was a scare to come into that Monday, but that was an opportunity. I think a lot more obvious in traditional markets, just personally speaking. I think that was a lot easier of a buy, especially on Tuesday. Bitcoin, however, likely to play alongside of that, just not as strong. So I'll stop sharing for right now. I'll get back to the comments. I'm going to read some of the comments as well. And then I think we'll just get into spoon feeding mode. Just to make sure I didn't fuck up my microphone. I didn't. Okay, that's good. And a reminder that even low leverage can sucker punch you. Any leverage can completely fuck you. Well, it's not necessarily the leverage fucking you; it's yourself fucking you at the end of the day. But the question is, we're using leverage. We're using leverage without a strategy. If you use leverage without a strategy, then of course you're always going to be sucker punched. But realistically, your leverage shouldn't really be driving anything regarding your risk management to begin with. 𝗫 strategy, please. I will present to you the 𝗫 strategy, also known as a moon strategy. No, actually, I wasn't planning on doing that one, but I guess we could go through that as well. It is kind of silly. I do want to read this comment here. It looks quite detailed, so that's good. Haneke, I think I'm saying this properly. Apologies if I'm not. Okay, here's my scenario. I do the 3 EMAs plus stochastic and RSI method on the 2-hour time frame. I use the crypto bubbles to find coins. If I go to a coin, it's already high. Do I wait for the price to reach the 21 EMA to make a decision? Okay, so if you are trading the base setup of this course, you take it on that first pass, when all of those conditions are valid. You don't just like look at it later on and be like, oh, all these conditions are valid, but that happened like 5 closures ago, and then just enter right here. Like that's not going to work, or I would imagine it's not going to work. I haven't necessarily tested it, but I would think that that's probably not going to work too well. What I would suggest to do instead, so a resolution towards this, instead of the current way that you're doing, is to set alerts on TradingView, and then set alerts for when your BBWP condition is met first and foremost. That's the one that's going to be usually highlighting everything else. And then you want to set an alert for maybe your stochastic oscillator. But the BBWP will kind of let you know when it's in the vicinity, and then you can wait down for that test. And I wouldn't wait for the test of the 21 EMA. I'd really be looking for the 55. That's where you want to get your higher lows in around. So that's just a few things. Let me just read through this a little bit more. What alerts? Oh, it's like you answer. It's like you already knew what my answer was going to be. Shit. I'm not. I apologize about that. What alerts do I use? Yeah, I would use an alert on the BBWP. So I'd put an alert for when BBWP goes below about 35 percentile, and then I would wait. At that point, you kind of have to be a little bit more glued towards your charts. I would look at where the 55 EMA is and try to position around there. The closer the better, obviously. And if you want to do things by the book, right on it. But yeah, that's what I'd be waiting for. It's a little bit more difficult to do it with the stochastic, but that would be the initial alert that kind of green lights everything else. So I'd put it there first. And where do I find the advanced stochastic? That is actually a paid indicator from my community, but you can find it through my own Teachable School via YouTube. And let me just make sure I answered everything here. Okay, yes, we got that. We got that. Yeah, I would. One of the things that I do see a lot with this community that I do just want to look, I'm not your fucking mom. I'm not here to tell you what to do, but I would strongly consider this. Be careful with alts in general when it comes to actively trading. If you're looking to invest and you're looking for like the moonshot 100x, sure, that's maybe where altcoins can be good. But if you're going to be actively trading, you want something with more liquidity. You want something that with more history, and for that, there's really only a few options. I think Bitcoin, Ethereum, and kind of Solana are the major games in town. I think Bitcoin's the most obvious one, and I understand that people are a little bit put off because Bitcoin doesn't move like in 100s of percents anymore. It only moves in like 5 to 10%, which is crazy, which is still a lot in my opinion. But of course, you can leverage up if you really wanted to make those gains up. In my opinion. And again, I'm not your mom or your dad telling you what to do. It's just I'm trying to relate my sort of thought process here is that unless if I like really believe in an altcoin, which honestly I don't, but if I did, and I'm investing for the long term, that's a different game. That's fine, sure, yeah, have a bag for that if you want to do that. That's great. But if you're actively trading, one of the big things that I think is very attractive about Bitcoin is that it's kind of stood the test of time now. It's been around for a while, and you don't really have some of the risks that you might have with some of the altcoins where, I don't know, what happens if one of the founders gets found like lying on his apartment floor with a bunch of cocaine and hookers and shit like that. It could be an issue, and these are variables that we have very little control over, but can absolutely fucking destroy our accounts, if we get a little bit too emotionally invested in such things. So I just consider such things. You don't need to be trading every goddamn thing under the sun to make a shit ton of money. I think really in my experience, like trading one or two is completely fine. For me, I only trade one asset at a time, and that just is what it is. Okay, Bitcoin, Ethereum, and more. I mean, look, I think realistically, all of this market moves in the same sort of step. If Bitcoin goes up, most everything will go up as well in varying degrees of strength and weakness. So it's not like you're going to get a signal on some shitcoin and then Bitcoin's going to be like going the opposite way. Very rarely will that happen. So, I just be careful with that. With rid dildos laying around his body. Haha, yes, indeed. MACD versus stochastic for trend reversal. Neither of those are going to be good for trend reversal. You're looking at momentum oscillators for trend reversal. This is the wrong way to be looking at things. Trend reversal is going to be best done by not a momentum oscillator, but by some sort of a trending indicator. Obviously, moving averages are going to be most suited towards that. Momentum oscillators give you they're best suited for governing the momentum within the context of the current trend, meaning that if you're in an uptrend, you want to be looking for upside momentum signals. But just because something has like a downside momentum signal doesn't mean that it's going to reverse. If there's any momentum oscillator that is decently geared towards that, it would be the RSI actually, with divergences very specifically, not just like RSI high equals sell, RSI low equals, but like fuck that. No, obviously that shit does not work. You're going to go broke trading that way. It's no way to trade. But getting multiple drives of divergence, that is somewhat of a reliable reversal signal, especially when you get 3 or more drives of divergence. That actually can be quite good. Anyways, I see Lings. He says, "Hi, Crown. What's up, man? I'm a noob, and this is my first time here. Let's make some fat bags." This is your first time. Can I ask you this question? Actually, and I'm genuinely just curious. Have you gone through the course content at all? I'm genuinely curious because I do understand that there's actually a lot of people who come here and they're just like, let me join in on the vids. Like, all right, cool. But do you like, do you have like the base of what we're trying to do? Okay, let me read through a few more of these and then we'll get into spoon feeding moment. Okay, that's a really good point. Trading only B2C could be a great strategy. Bitcoin or just whatever, the other big ones as well, can be okay. But I do think that Bitcoin, it's the best option if you're going to be more like actively trading, of course. Okay, so hey, Crown, could you talk a little bit about how you determine which level on a specific oscillator is considered a threshold by backtesting? So here's the best way that I've found to not just do what you're asking, but also to just come up with strategies in general. I first highlight the piece of price action that I am trying to model. So if I'm trying to find like a higher low, for example, I will then bring up my indicators, just whatever indicators you want to start to test, and I will document where that indicator is around that reversal time. And then I'll go back in history and see, is this a repeatable process? Is there some sort of signal here amongst the noise that is predictable over time? And that usually answers your question. It's like, okay, does this happen like more often than not? Is this a reliable signal? The answer should be self-obvious once you do the work. And again, that's basically how I come up with strategies is I'll put a few indicators on the board that I want to test. I'll highlight a piece of price action that I'm trying to capture. And then I just look, okay, does this work over time? Like, is this repeatable? And then add something or take something away from there. And, after like 5 hours of looking at screens, you'll figure something out. You'll figure something out. So anyways, you go on to give the example. If I'm using BBWP versus stochastic trade strategy, how would one determine whether a BBWP level 40? Yeah, exactly what I said. You just have to look, man. You just have to look, and that'll be your answer. But the guidelines that they give out in the course are going to generally put you in the right direction. So if you're unsure of where to start, go with the guidelines in the course. They'll get you on the right path, and then from there, you're gonna dial things in very specific to your own preferences. Okay, let's see. Rufus says, "Hey, Crown, why does your BBWP have 2 lines? Mine is always 1 line. Is there something I need to do with the settings?" I'm guessing you're talking about this and then the white line here, which is just a moving average. It should come, actually, I'm not sharing my screen. Let me just share my screen really quickly. Here we go. Okay. And what I'm guessing you're referencing is these two moving parts right here. The BBWP is the colored portion. The white line is a moving average, and it should come default with that, with both of them. If it's not already on your board, it's possible that in the style tab you might have ticked off the moving average. That's possible, I suppose. But if you're unsure, then what I'd suggest to do is I'd suggest to delete the BBWP and then re-add it, and it should come exactly like that as default. So that should hopefully solve that issue. All right. Let me read through a few more of these. What's up, Mimelius? Hopefully, I'm saying that properly as well, ma'am. How many trades indicate that the strategy has stopped working? It's not about the amount of trades in my experience. It's about the equity curve. And the equity curve, we don't want to obviously see that go into a downtrend. So that's the way that I define it. Let me give you an example because it's going to make a lot more sense with this. And I understand that you are like you're really into it, which is really fucking good, man. Like I love seeing in there. I love seeing in the Crown Quant automation service. So I'll just give you an example really quickly here. Let me go to my other screen. Okay. So for this equity curve, for example, you can see that there are clear and obvious what I call trending higher lows here. These are the lows in which new highs were produced from. So one of them would be where my cursor currently is right now. This one right here would not be because it does not make a new high on that next drive. This one does, where my cursor is now. This one over here would be one. This one over here would be one, obviously. This one, all of these ones that make new highs from. So as long as those higher lows remain higher lows, strategy is fine. Or at least I'm completely fine with continuing to run that strategy. The second that it comes down below one of those prior higher lows is where I say, okay, now we have something new going on here, and it's time to one, turn the strategy off and figure out what the hell's going on, because likely this one has outlived its shelf life. That's usually like the first major damning signal. There can be instances where maybe it might still be okay, and just something weird happened. It's possible, but I don't see that happen too often. So I would go with the assumption that if you see that higher low on the equity curve destroyed, go back to the drawing board. Anyways, I'll read the rest of your comment here. I built my first one with the skeleton key. Awesome, man. 15-minute scalp long, 63% strike rate. Fuck yeah. 1.37 profit factor. Good. 465 trades sample size. Awesome. Okay. But for the past 150 trades, it is slowly declining in the equity. Okay. So yes. Okay. I see. I see. Um, yeah, I would imagine that your equity curve probably is not still in that uptrend, assuming that the last 150 out of 465 trades is slowly declining. So I would imagine that relationship is already destroyed. So you've found you've found a bit of fool's gold there. Good results at first, but not so good results in the current period. We typically want to optimize for the current period. And when we're doing back tests and and when we're kind of like figuring out the results, we want to prioritize, especially if you're on lower term timeframes like the 15-minute, we want to prioritize, the last 2 to 3 years of price action. If you go up to an hourly, we want the last, I'd say, 4 years of price action. And of course, the higher term time frame you go, the more that you'll naturally need. But I like to just generally run back tests from the start of 2018, which is what I consider like the modern era of Bitcoin, till current times. It's a pretty good sample size now. It's about 6 years, and for most time frames, especially let's say like 2 hour and under, it should be a pretty damn good sample size. So I'm going to guess that you did not run a deep test on that. So I would say the next thing to do is to run a deep test on that and just see how is it done throughout since 2018, and kind of figure it out from there. Because if you're not running a deep test, 15-minute time frame will only give you like, I think, 6 months worth of price action data, which is not ideal. So yeah. All right. I'm gonna take some more sips of this water. My throat is still recovering from this whatever the hell that I had, and then we'll get into the actual content of the day. Simon actually has a good question here just before we go on. A ground for the stochastic. What if the percent K is turned up, but the percent D is not? Is the percent K above the percent D? Then yeah, that's fine. But if the percent K is up and the percent D is not, but they're still crossed down, then obviously that's not gonna be a signal. It's all about the cross, like which one is above the other one, not necessarily which one is up right now, but which one is currently above the other one. If K is above the D, upside signal, of course. Okay. Okay. And one last one here. Do you use different settings for your stochastic on higher timeframes? I don't. I keep it stock standard. Well, it is not default. And just in case if you did miss the video in the course about the settings for the stochastic oscillator, it would be this. We want to have percent K 14, percent D 3, smoothing of 6. That's what I like to run for crypto specifically. I will change it, however, from asset class to asset class. So for an asset class like this, NASDAQ, which trades on a traditional market schedule, that I will actually go more towards default settings, default for the stochastic oscillator. But for crypto, for things that trade 24/7, for Forex, shit like that, these are the settings that I'd use right here. Just seems to get things a little bit better. Yes, it is kind of smooth in some regards, but I find that that does increase the signal to noise ratio. All right, I'll just take one last look through here, and then we're just getting into the spoon feeding time. What is the tool that used to show drives of bullish and bearish divergence? That's actually Caretaker's RSI. Again, available through my Teachable. Well, actually, one of the oldest indicators that we've had there, and funnily enough, one of the most successful ones. I mean, it's good. It works. He did a really good job with it, Caretaker, and so we've been using that for a long time now. All right, a few more sips of this water, and then I'm gonna ask Elsa to refill it. Time for you to work. Okay. All right. We'll get refilled on that. And yeah. All right. We'll start off with this strategy. Okay. Let me just share my screen again. Okay. All right. All right. All right. Okay. And I see there's some good conversations going on in the comments there. That's really awesome to see the community helping out each other. Okay. So this is probably the most simplistic strategy to play out in terms of what you actually need to do. This is a strategy that will literally, it's literally only this. We open a long, or not we open a long, but I would theoretically be opening up a long. Let me just double check on the exact time here because I want to make sure. I believe on, Monday at 00 UTC. 00 UTC. And we will close that long on Tuesday at 10 a.m. That's it. That's all we're testing here. And of course, we're using the Crown Quant automation tool here to derive these results. And if you would have done that over the past 12 years, you would have had these results. Very simple strategy. Very simple strategy. And the way that we found it out, found this one out was one by going through the daily statistics, which I actually do have an indicator for, to give the general idea, and then just testing from there. And we found that Monday, generally for Bitcoin, has been a positive closing day for Bitcoin, also with decent positive returns, about 3% on average. And so you can see here that over this 12-year period, it has had just better than, slightly better than a 53% strike rate. So basically a coin flip, very close to a coin flip here. But because Monday has been a positive gaining day in terms of average returns, average positive returns towards yourself, well, the profit factor is over 1.4. So just playing this out over and over and over again, has led to decent results. Now, could you further optimize things from here? Sure, absolutely. I'm sure that that anyone who's listening right now who likes this can take this and just run with it as much as you want. But at the end of the day, just as a base understanding, very simple strategy, very effective strategy, and you can win half of your trades and still be quite profitable, which I think a lot of people look at a 50% strike rate as quite low. And I'm going to show you way lower than that, actually. We're going to go all the way down to 20s. we can go all the way down to 20s, basically. But again, just very simple here. Just opening literally on Monday at the strike of 0 at 0 UTC and closing Tuesday at 10 a.m. UTC. Really, really fucking simple. And you can see several of the iterations over the past 5 weeks here. I don't think that there's too much of an explanation that is warranted on top of this one, but I want to make sure that I am yeah, okay, there we go. I think Olivia says no direct messages, please. That's right. Off limits for my own sanity, or probably for hers. But yeah, just very, very simple here. Again, an example of basically trading flows is what you'd be doing if you'd be employing something like this. And also just good general knowledge if you're going to be trading Bitcoin that Monday does have generally outsized returns in favor of the upside, I suppose. And if I were to come up with a theory for this, not that there needs to be a theory, and not that we can even know that this theory is true, which maybe I shouldn't even go into, but if I had to make one, it would be this. Look, many major money allocators, asset managers and whatnot, they do their things from traditional market perspective, which means that they typically are going to be allocating on Mondays. I don't know if this necessarily holds up for Bitcoin. Definitely holds up for traditional markets, but it is one of those weird things that does tend to happen. Anyways, we'll go into the next one here. This one is going to be a 12-hour strategy, a very, very simple one as well. This one is it's a little bit more involved than the last one, but it's still very fucking simple. It's going to require the use of one indicator. It's going to require the use of a exponential moving average. In this case, we're going to be using a 5 exponential moving average here. Yep, 5 EMA. It's going to be the red line. And from there, what we're going to do is we are going to open a long when price closes above that red 5 exponential moving average. And then we're going to close that long when Bitcoin closes below the 5 exponential moving average. Now, I did forget one last piece, which is that there needs to be an uptrend as defined by the crown cross moving averages. So the 21 and the 55 EMA must be in the upside formatting. And if that condition is valid, then yes, it's as simple as close above that red 5 equals open long, close below equals close that position. That is both the profit taking and the risk management all in one. I wrote it out over here as well. And actually for the rest of the strategies, we will go through it in this format. But just in case if you're more visual person, you like to look at text more, that's fine too. Again, 12-hour time frame, long only. 5 EMA is the source of edge, and then the 12-hour crown cross. What defines risk management parameter? I mean, just close below the 5 EMA, also going to be the profit taking as well. But how will positions be entered? Exactly as we just said, 12-hour KC up and close above the 5 EMA. That's it. That's literally fucking it. That's it. This strategy, whoops, okay, don't know what that is. This strategy over the past, I guess this is the past 6 years here. We could run a deeper test on this if we wanted as well. But again, a little over 34% strike rate, very low, but the profit factor, very high. So in this case, the profit factor is above 2. We've had 274 closed trades since 2018. And when we go into the performance summary, here's where, it doesn't take a genius to make this one work. Average winning trade returns 7%. Average losing trade loses 1.79. And when you have a setup like that, you take it every fucking time. That's what you do. Because over the long period of time, it's going to produce something favorable to yourself. And as you can see here, it can be quite active, actually. It can be very, very active. But on the losses, it's in and out very fast. And on the gains, it can let them run. In fact, something that you'll notice, and let me just take another sip of this water. Something that you'll notice is that most trending price action begins by closing above the red, the red 5, and ends when it closes below. In almost all instances, especially on higher term timeframes, on lower term timeframes like 4 hour and under, that is less so. But once you get to 12-hour daily, especially weekly, that is actually quite consistent. In fact, this strategy will have pretty decent results, changing nothing except for the time frame to a daily as well. So this is a 12-hour here. Here's the daily, same thing, same setup. You can see it's a little bit, well, let me go to a more long-running historic chart. And now I just destroyed it. So one moment, let me fix this up. we'll make it. I think this one needs a little bit more leeway there in order to get these trades off. There we go. Yep. So in this case, this is a daily now going over the full history of Bitcoin. I would ignore this first like fourth or fifth of results over here. Bitcoin was a little bit too new, too young, and some of these returns were just fucking insane, But of course, even from there, if we were to take it from about 2014, 2015, yeah, things are up and to the right again here too. So same strategy, slightly different time frame. Much higher profit factor. Percent profitable goes up a little bit as well. And again, this is with basically zero other optimizations. And again, very, very simple. Very, very simple. This one keeps you in pretty much all the upside moves. This one, I mean, even this year in January of 2024, longing at 4,100, gets out over here at about 43. Then it takes the big one. And that's what this one's really good at doing. It gets these really big, monstrous moves. This one over here entered 43, closes 51 or 52, opens again at 50, 51, closes over here at 69. I mean, again, it's a big heavy hitter, but it does take a lot of paper cut losses in between there. All right, I'm taking another sip of this, and then we'll get into the next one. Let me just remind myself what this next one is. Okay, this next one is only going to be using one indicator, the BBWP. And this one, again, a little bit different, using some of the tools from this course, but in perhaps a slightly different way. The BBWP here is going to be the only driver of this one. So I'll show you the results first, then I'll show you how to actually play out this strategy. This one tested all the way from 2015 till current date, or actually August 10th, but we can just, well, might as well just select today. That for whatever reason, TradingView does not update the day to like the current day when you use the deep tester. I don't know why. It's fucking annoying, but it is what it is. It is what it is, man. Can you also use that strategy reverse for shorts? I actually have tested that, and yes, you can use it, but there do need to be some changes made to it, namely with the days traded, because Bitcoin is generally an upside asset. A lot of days you actually want to omit, but I don't have it readily available right now. But I do remember I have tested it, and I did find that it was viable. Just the upside is just better. The upside is just better. I mean, when you're thinking in terms of risk reward, it is better for Bitcoin and most assets, to be honest with you. When you get into like the super shit coins, maybe not so much, but with traditional assets and in Bitcoin, yeah, it can be very, very powerful to just kind of err on the side of upside. So here we'll go through the settings on this one. We're going to be trading the hourly time frame. So up until now, we've done just very high term timeframes, 12-hour and daily, and then also that Monday strategy. Now we're going to go down to the hourly time frame. It's going to be long only as well, and we're going to be using just the BBWP and actually the Crown Cross. I almost always forget that one because it's so like synonymous with most things that I do. I did make a note here for the BBWP. We're going to change the settings. Just like we alluded to last week, actually. We're going to put the look back from 252 to 100. We're going to keep the length at 13. That is default. So only the look back changes here. For the risk management parameter, closure below the 𝗧𝗥𝗢𝗪𝗡 support range low, we'll do it on this one. And for position entry, we need to see three things. One, the crown cross must be to the upside. Two, the BBWP must have a positive slope from the prior closure to the current one. And three, the BBWP must close above 50 percentile. If it does that, just reading some of these comments, really, really good stuff. If all of those three are valid simultaneously, we have an entry, and we will exit if both of these are true. BBWP goes below 50, and the open of the current candle is less than the close. And I understand that this might look a little bit confusing. It's really not when we get into an example. But the open of the current candle must be below the closure while BBWP is below 50. If those two things are true, we exit the position, we take a profit or our loss, because that also could produce a loss here too. And then considerations, we're going to omit Thursdays, just as a general rule, by the way, and something that is good general knowledge for especially cryptos and Bitcoin, is that in general, if you are trading long strategies, you want to avoid Thursday. Thursday, for whatever reason, is typically a down day, historically speaking, for Bitcoin. And almost every strategy, I should say, almost every long strategy will benefit from getting rid of Thursday options, especially if it's on a lower term time frame. Again, when I say a lower term, I mean 4 hour and under here. For higher term time frames, it does matter less. And I also made another consideration that the daily trend, meaning that the daily crown cross moving averages, those should also be in an upside posture. And if you have that as a condition, it will improve the results on this one as well. So here we go. Let's go into the actual sipping down as much water as I can get right now. Let's go into the actual strategy itself, and let's go through a few examples. All right. So I'm just going to pull this onto my other pane over here. All right. So we want to make sure. Let me get rid of this. Okay, there we go. All right. And oh, and let me put these moving averages on here too, so that we can see where the crown cross is. All right. Show it to me. Okay, we can see that there has actually been no oh, okay, there we go. There's some trades. All right. We have a couple of losses, couple of wins. Let's go through a few of these. So we want to see, again, BBWP above 50, while the moving averages are in the upside cross posture. And then we want to see the BBWP slope is positive. So, and we're also omitting Thursday. So in this case, all of this price action right here is actually during Thursday in the way that this strategy would define. So we have one right here, BBWP above 50. I marked it off right there. So let me just put in a vertical line. Boom. Okay. Nice. Then we need to see that the BBWP slope is positive. It's quite painfully obvious that it is in this case, but let's just look at the prior one, prior closure. The nominal value at the top left-hand side is 12. Yes, this is an hourly time frame, Chris. 12, and then the current one is 53. So that is definitely an increase, meaning that we do have our positive slope. And obviously the moving averages are in the upside crossing here. So in this case, this one obviously does produce a loss. We see BBWP come below 50 percentile on this closure here, while the open was less than the close. Yes, open less than the close. Okay, and so this one would obviously be a loss. Anyways, moving from there, we have a very small win right here. Let's find maybe something that's a little bit better, perhaps. These are kind of weak, as price action's been pretty lackluster recently. But this one over here, boom. Moving averages are in the upside positioning. Yes, we have that. We can see that BBWP is definitely above 50 on this tick here. And we can also see that the slope is positive. And that would be our entry, 65,762. And then BBWP comes below 50 right here. And do we have the open less than the close? We do. And in this case, we have a nice winning trade. So a little bit of a simple one. By omitting Thursday, do you mean not to enter, or do you mean to exit on Wednesday? It means no opening trades on Thursday. Like if it's Thursday, we do not open any new trades. But if there's a trade that was already opened from Wednesday, we can leave it running still on Thursday, although probably is going to be a higher probability to lose there. Okay. Let's go through another one. Should we go through this one or this one? You know what? Yeah, let's do this one here. Okay, so this one is going to be using a tool that you get access to alongside the Crown Quant automation service as well. This one uses what we call the Crown VMP indicator, which is a momentum and statistics-based indicator. And this is, again, on the daily time frame. Let me just re-up that. You can see this one has a little bit of a higher strike rate compared to the other daily strategies that we looked at just above 51% strike rate here with a profit factor of 276. This one probably could benefit, honestly, from having more iterations overall. But regardless of that, a winning setup long term. This one does seem to produce I believe, if memory serves me correctly, yes, about 22.25% average winning trades versus the average losing trades, which lose about 8.5% or a little bit less than 8.5% here. All right. So was yesterday an anomaly for a successful long? Just because one Thursday is up doesn't mean that the rule is broken. So is it an anomaly? Again, we're talking about a strike rate of about 60 to 40 there. I could actually bring up the exact one if I have my indicator here, but I don't have it on my chart right now. But I believe it's somewhere a little bit above 60 versus 40 in favor of closing negatively for Thursday. But this one is, let me just make sure I have the right one here. Yes, this one again focused on the daily time frame, long only. We're going to be using the Crown VMP. We're going to have a 20 look back there. We want to see the crown cross moving averages in the upside posture, and we're going to use a stop loss by percentage for this one rather than, your the traditional method with that 𝗧𝗥𝗢𝗪𝗡 supporting resistance type thing. So just giving an example of how to use stop loss by percentage. And in this case, we're going to use a max stop loss of 8%, meaning that once price goes against us by 8%, we take the loss, and this is done on a closing basis as well. So in this case, or in some cases, you will actually get a little bit more or a little bit less, but it'll average around about 8%. How positions to be entered? We need to see the crown cross the upside, and then just the VMP below 10. Again, very, very simple here. In this case, I have already marked off where the VMP 10 marker is. So reads below here alongside a daily uptrend constitute an entry. We can see this one's actually had a rough go of it the last few months, lost 3 trades in a row. But again, long term, we do, well, I like the results at least. Long term, we can go over some of the better gaining ones because again, these are going to be more like paper cuts compared to, well, this one, which is a tremendous gainer right here. Again, we see, or sorry, this one right here, starting at around 39,800. Again, we see that uptrend. We see below 10 percentile, boom, entry. And then when the VMP gets above, where is our take profit? 85, then we take profit. In this case, this one happens very, very soon. We have another example, or another few examples right around here. These ones a lot better, a lot bigger, at least in my opinion. This one opening about 41. What is this? About $42,000, closing over here, 46.5. Same thing over here. Another bigger winner, about 35.5 open versus about 40,000 close. Again, just simple stuff. Simple stuff. I did forget to mention that there are a couple of considerations for this one. I am omitting entries on Saturday and Sunday. And I am also going to apply, or you could apply a 3-day trend filter that'll likely get those results a little bit better. In this case, I don't believe I have them applied here, but I did want to mark that off as a consideration that you could make for yourself if you desire, because well, I mean, you might like those results a little bit better, might fit your preferences better, as it will get rid of some of the losses, but it will also get rid of some of the overall total trades, which will likely reduce the net profit, but give you a higher hit rate. And some people, some people just like that better. Some people just would rather see a win than a loss more often, even if the net profit is actually going to be lower long term. All right. Let me take another sip of this water, and we'll get back into it. Actually, I want to address some of the questions here at this moment. So Jan says, Crown, do you ever use the 9 and 21 cross instead of the 21 and 55 for strategies? Not for trend, not for trend. The 9 I like to use in terms of like judging how strong the current move is, but the 21 and the 55 is usually the general direction. The 9 is more so like, are we trending right now? If assuming that is kind of pointing in the same direction. Anybody using tools like footprint, volume profile, and depth of market for trading daily Bitcoin? I do not. I think that most of these are just garbage, to be honest. But if you can make something work with it, then make it work. That's completely fine. In my experience, though, when you get into especially order book type stuff, depth of market, you're chasing after a phantom. So let me explain. First off, you don't even know how. Like, I'm not saying that you don't know, but like no one knows how to analyze the the fucking order book, the depth of market. Like just because, oh, we have a lot of buy orders stacked up over here does not mean price is going to go fucking up. It doesn't. It doesn't. Because why? Because those are buy orders that are being visibly shown in the order book, meaning they have not been fucking filled. And you know what? You know what orders do not move the market? Orders in the order book. They do not move price. You know what moves price? Market orders. Where do market orders show up? They don't show up in the order book ever. By definition, they can't. They have to be taken at market. So, in my experience, it's a big fan to me. It's a big fucking big time sink that I see a lot of people get it. In fact, not only do I see a lot of people get into it, I got into it. I remember not on my first day, but on one of my first days of trading, I was looking at the order. I was looking at the order book, and I saw that there was a million bid on, I forget what stock. Who knows? And I turned to my mentor. I'm like, holy, like, do you see this? There's a million bid right now. He just looks at me and says, "Fuck you." Don't look at that shit. These are things that, again, they exist in the background, but until it's filled, it means absolutely nothing. And of course, a lot of some of the bigger market movers, maybe not all, certainly not all of them do this, but there's probably at least some, know that newer people will intuitively think, oh, market, order book, market depth, these sort of things. If there's more buy orders, then it has to be going up. That's demand, right? So, some games can be played there. But remember, like these orders can disappear before you even realize it. It just takes one click of the button. So a lot of people will put in orders in the order book without any intention of getting them filled, just to kind of throw you a curveball. All right. Um, nice. Actually, some people creating some templates. That's good. VMP is Crown's premium or free indicator. You actually get it with the Crown Plot automation service, and usually I have like a sale going on for it for a free month. As well. Diechester says, yes, works like a charm for lower timeframes. Sure. Awesome. If you could cover how you allocate capital across multiple concurrent automated strats. Oh, this is a very easy question for myself. I don't do that. I like to run one, maximum two strategies at a time. The reason why I do that is because I like to allocate heavily of my designated trading stack, if you want to call it that, towards strategies that I generally like. I don't find that it's super, in my experience, I've not actually found too much value in running like 10 or 20 different strategies with smaller amounts than just kind of highly concentrating it in, with bigger size in a smaller amount of strategies. And for me, that's a preference thing because I don't know what it is, but I've always had this issue when it comes to trading. Whenever I start to watch more than two things, I just break down. And again, it's a preference thing. Some people might like it. As far as allocating capital across multiple different strategies, really what the allocation needs, what the allocation needs to take into account is what is the minimum amount that I could allocate towards a strategy and lose 10 trades in a row at max value, like maximum loss. And will I still be okay? If I'm still okay, sure, you have enough money to allocate towards that strategy. And you could use, the leftover for another strategy, I suppose. But I personally, I don't like to be going back and forth. I get, I don't know what it is. I just get confused when there's more than two things going. And even then, I like to just run one and just, look at that. I just feel like I understand it better. But if I was going to run multiple different strategies, that would be the algorithm that I'm running in my head is like, okay, if I'm allocating to this, I need to make sure that in the unlikely but possible event that we get 10 max losses in a row, I will still be okay, and this strategy can still, still has enough equity to actually put on trades. If that is okay, I think that's completely fine. Maybe it doesn't necessarily need to be 10 max loss if you're going like 10, like max loss, as decided by your back testing, maybe like 5 in a row. You need to be able to survive. Again, something that probably hasn't happened, but just worst case scenario, we want to be able to survive the black swans. Anyways, I see, okay, a few more good questions and we'll get back to strategies. And I'm going to take another sip of this water. Okay. Um, Two says, Crowned, for the hourly and 4 hour, what is the minimum number of trades for a strategy to be considered valid? Okay, really good question. So it does depend. Let's just take the hourly for example. So if you are having a strategy on the hourly that is a scalping strategy as compared to a trending strategy on the hourly, you're obviously going to want more, or you're going to be able to produce more iterations for the scalping strategy. And so you generally going to want more. Now, I would add another dimension to this. It's not just about the time frame, it's about also the amount of time that has actually transpired, like the years. So for an hourly, I want to at minimum be going back to at least 2020. And between 2020 and now, I mean, look, you can find examples where you only have like maybe 200 trades during that time. And it's a training strategy. That might be fine. That might be completely fine. But it's really the time, not necessarily the amount of trades, but the time that's going to make that. But of course, if I'm trading an hourly time frame, I'm looking at like the past 4 years of price action, and I'm doing more of a scalping strategy there, I'm going to want to see like about 400 trades as kind of like a general rule of thumb. For a 4 hour time frame, obviously it's going to be less, but the relationship is not linear. For a 4 hour time frame, I want to be going back to at least 2018. In general, I want to be going back to 2018 for most things, but I'm talking like minimum viable here, as you asked for. Um, but that more is generally better. But then you run into the issue where you go a little bit too far back for Bitcoin, and some of the earlier trade results are just, they can be very deceiving because they can print really, 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 really big percentage wise returns. Elsa, can you turn on the sauna, please? And also, can you close the sauna door after you turn it on so that it every time I ask, every time I ask her to do this, she does turn on the sauna. She's very good at that, but she then does not close the door to the sauna. So like the whole bathroom gets really fucking hot, but the sauna is not that hot. It's not a good, it's not the right way to do it. All right. Kevin says, interesting about the depth of market feedback. And my experience of it was the same. Couldn't make it work. A lot of people have lost their minds looking at that and trying to make sense of it. Always made the wrong decisions. Yeah. And yeah, exactly, man. It's a phantom. These things do not exist in the order book. Now, I want to massively differentiate looking at the order book versus looking at the recent trades or flows. These are two different things because recent trades or flows, these are trades that have actually happened, meaning that they actually do affect price action. But then you run into the issue of, well, that's exactly what the price chart is showing me to begin with, and it's just easier to look at there. So, why not? But it was kind of like a more old timer thing to do. There's a few guys on the floor of the exchange when I was there who, they had been there for a long ass time, and they could just look at the recent tape, and they could kind of they kind of knew it was really cool what they could do. But I think this is kind of like a lost art now, or at least it's a dying art at this point. Okay. All right. I noticed you have 7 Bitcoin tickers on your watch list. Yeah, just different exchanges. I look at the index here. I have Bitfinex, I have Bitstamp, I have Coinbase. I'm like showing my age, and BitMEX. Like most of these exchanges are just irrelevant now. In the past, like back in like 2018, 2019, it's really good to be looking at Bitfinex for a lot of things actually. Bitstamp had the most history at that time for a ticker on TradingView. Now we have the index, obviously, so that's much better. Coinbase, just well, because Coinbase was like the leading spot exchange, and then BitMEX. I mean, does anyone even know what BitMEX is anymore? I'm actually curious if people here know. I'm just going to ask this question to the chat. Do you know BitMEX? Okay, you do. All right, nice. P Roots got me. Yeah, man. BitMEX was the game. That was the game for a few years, actually, until they came under fire, as pretty much all the exchanges do. Yeah, BitMexico. That's exactly BitMexico. Right, right on, man. All of these new crypto exchanges were basically spun up in reference to BitMEX. You like your Bybits, your Binances, all these sort of things. But BitMEX was like the original 100x bucket shop where everyone would lose their money on. It was really, really good. Yeah, XBT. It was great, man. It was fucking beautiful. It was really, really good. Okay, I'll reference a few more of these and then we'll get back on track here. Okay. Do we evaluate possible entry when the candle closes and conditions are met? Exactly, Christian. Exactly. All conditions valid at the closure of the candle. 100%. Yes. Vlad says, hey, Crown, if using a trading bot with the quant program, for example, the trades open and close will be market taker orders, not market maker orders, correct? You can specify which one you want to do. Personally, I like to open, if I'm doing automated trading, I like to program it to open with a limit order because lower fees for most exchanges. By the way, shout out to Prime XBT for having extremely low fucking fees, which is actually insane. Like much less than most of the exchanges. And then I will close with a market order. The reason why I close with a market order is because I have run into situations in the past where I tried to close with a limit order and then I didn't get filled, and a very profitable position then turned into a very not fun and very unprofitable position. So that's been my experience with that. But usually you can get away with doing a limit order for the entry. Especially during these times with Bitcoin because things just float around so much. Yeah. Anyways, I'll get back to it over here. Okay, need to make sure that I'm also on YouTube as well. Nice. I love my YouTubes. All right, sweet. Okay, let's go to the next one. Let me remind myself, what do we want to do here? Do we want to do a Let's actually, okay, I have two more on the board. One's an hourly strategy, another one's a 15-minute strategy. Let's actually go down to the 15-minute strategy. We haven't done a very low term time frame here. I do want to preference this one by saying when you get to very low term time frame strategies, and I'm talking like 15-minute and under, there is one major consideration that is difficult to get around, and it is this: fees are going to fucking kill you. They really are. 15-minute time frame, I think, is the lowest viable time frame. But then you also run into another issue as well. The lower the time frame, theoretically, the less long it's going to be viable for. Now, this one's actually stood the test of time since 2015, so this one actually it has been doing quite well. But I would say your biggest consideration with the lower term timeframes is fees. Most crypto exchanges are going to have, a taker fee of like 0.06% in a lot of cases, and a maker fee of, I mean, I've even seen like 0.04% per contract for maker fee. Prime XBT actually does have significantly lower than that. I think it's like 0.01 and 0.02 for maker and taker respectively. So that actually is a significant difference, and it can massively influence the results of the equity curve long term. I just want to demonstrate to you really, really quickly here. So this is with not 0.026. Let me actually do this with Prime XBT, which I believe is their maker, and I'm going to bring it all the way down to 0.01. And you're going to see this equity curve probably get a lot better. And this becomes a lot more obvious on lower term timeframes, just because the natural edge between your entry and exit in terms of actual price action is just going to be lower than what it would be on an hourly. I mean, it should be lower. Like if they're the same, you got a problem. If the hourly is lower than the 15-minute, you got a real big problem. So let's see what the results spit out right here. I'm actually just curious. It shut down. You mean BitMEX? I think BitMEX is still rocking and rolling. Oh, Cryptopia. No, yeah, Cryptopia. Holy shit. You've been in here for a long time, man. Yeah, Cryptopia. I remember that name from like 2018. Wow. Yeah, we can see that the results do go up a decent amount here with 0.01. Do you always have an 800,000 for initial capital and 500,000 for order size? For the initial capital, it just needs to be able to cover the order size enough so that the simulator can play out and like still have enough capital to put on trades. So that's just very specific to the simulator. The order size is what I like to model that after what my order size is going to be, so that I can get generally accurate results for what the returns will be for myself. But of course, the percentage is what we're interested in here, namely the profit factor and percent profitable. Those are the two big things that are going to be, steady despite those two numbers. So anyways, let's go through this strategy. This one will require a couple indicators. We're going to be using the VMP and the crown cross. So, I would say still pretty basic here. Again, the VMP comes with the crown quant automation. And you could maybe even it'd be hard to make this actually with the default indicator. You could kind of use a stochastic, but it's not going to be exact. Anyways, 15-minute time frame, long only. We're using the VMP and the crown cross. VMP will have a 100 look back. Just want to double check on this to make sure. Indeed, I have the Joule P at 100 look back right there. And for risk management, we're just going to use the stock standard 𝗧𝗥𝗢𝗪𝗡, close below that trend low. So close below the most recent support, and positions will be entered when the VMP fast is white. So when I say that, I mean very specifically this portion here. You can see that it turns white right there. So it goes between cyan, white, and blue. I'm talking about when it turns white on a closing basis. And when the Joule P is less than or equal to 20 percentile. That's it. Those are the two entry conditions, nothing else except for the other considerations, which we're going to actually omit Tuesday, Wednesday, and Thursday. But before that, how we exit positions, just when the VMP fib gets above or equal to 95. So this is on the same indicator here, and it's this portion, so above 95. So I'm going to mark off that area as well. So let's go. Actually, going to be all the way up there, really, really high up. Anyways, back into it. All right. So considerations, I'm suggesting to omit Tuesday, Wednesday, and Thursday. I know that these, well, I happen to know that these will improve the results for this one, particularly the trend filter, meaning that we're going to have the crown cross on the hourly time frame needs to be up. So you would actually have to reference multiple time frames here. You need to reference both the 15-minute and then the hourly. So the hourly trend must be up. The 15-minute trend can be whatever. Doesn't really matter what the crown cross is doing on the 15-minute, but the hourly must be up. And from there, well, we just wait for we just wait for this to turn white and below 20, which actually I forgot to mark off, which I will do now. So there we go. All right, now let's go find some examples. We can see actually one right here. I'm going to assume that the crown cross on the hourly is to the upside here. In fact, we could actually also just put this up. So one moment, let me do that. My voice is starting to leave me, by the way, so apologies. The raspy lesbian starts to, if I start to sound like a raspy lesbian. All right, let's throw this on. Let me format it really quickly. It's a little bit too busy as of right now. There we go. Okay. All right. Lovely. Okay. So let's just check on the hourly. Are these moving averages across the upside here? Yes, they are within that current segment. So let's go back to it here. That condition is valid. Then we just wait for the VMP to turn white. Hey, this is not operating how it's supposed to operate right there. Just one moment. Yes. Okay. Oh, derp. Derp. Okay. I just derped. Yes, the Joule P, which is this portion here, the histogram that you're seeing on the chart, that needs to be below 20. And the fast, this portion here needs to be turning white. So these two conditions are simultaneously true, white and here below 20. Okay, let's mark that off. I mean, we already know that this one is going to be an entry as defined by the algo. And so we would have entered at 59,250 basically. And then we wait for the fib to get above 95 percentile. So, or yes, 95. So we don't actually see that happen until way on over here. This one holds onto the trade for quite some time. And this one actually closes at 60,840. So about a almost $2,000 trade there on a 15-minute time frame. Not bad, actually. In fact, I want to see what is the average winning trade for this. Let's double check. Average winning trade, one spot 89%. Average losing trade, about 2.5%. So this one does benefit from having a higher win rate here. Let's go through a couple more examples. All right. Let's pull it back. In this case, we have a few here. None of them super particularly interesting, but we have one right here. Boom. We see turning white and below 20. Just mark it off right here. And the VMP is actually like very, very low here. It's in the single digit percentiles. So that would be our entry. And then price action pops up. We see the fib close above 95 right here. Thus, we take, in this case, our profit. We have a couple losses right here. For the losses, I would need to put on the 𝗧𝗥𝗢𝗪 in order to show. There we go. And you can see that's once price closes below the 𝗧𝗥𝗢𝗪, those losses are taken. Slightly different logic than what the skeleton key uses, but still very similar. Let me see if I can find another one quickly here. This one, big loss. But over here, small win, big loss actually on this one. Let's see. Let's do another quick one. These ones kind of just coming within the overall context of this trend. And what do you know? This one, again, turning white right here. Below 20 on the histogram right there. Okay. We have our entry. And this one actually exits literally 2 candles after that. The fib is above 95 soon after that. So this one definitely benefits from having a higher strike rate, as it likes to collect these kind of smaller wins. We did see a big win over there, but in general, a little bit smaller. And then the losses tend to give up a little bit of that, as will always be the case. Actually, in these ones, a little bit better edge here, to be fair. Do you always set a stop loss? So if you actually notice, no, in fact, I never set a stop loss on the initial position. That actually would be mostly impossible to do, because my risk management is going to be based off of something that's moving. In essence, it's moving on a candle, on a candle closure basis, right? Of course, it's not actually like moving intra-candle, but for example, when we're using the support and resistance, how would you put in a stop loss when we need to be aware of the most recent one before the trade is even taken? Like it wouldn't work that way, of course. So, in this case, like this one over here, we have our stop loss once we get this next, this next iteration. But before that, we wouldn't be able to put in a stop loss like alongside actually putting in the trade if you're using support and resistance. Now, of course, with one of the examples that we gave earlier, we had like an 8% stop loss, just a stop loss by percentage that you could have done, alongside your order entry. But I actually don't have too many strategies that use just like a base percentage base stop loss. In fact, my most recent strategies don't have any of those. In fact, the most recent strategy that I'm actually running myself is the 12-hour strategy that I showed you here. And the stop loss, I mean, is just the closure. Whoops, Jesus Christ, just destroyed it. Is the closure below the 5 exponential moving average. So it's generally actually pretty nice. But of course, like you can't just put in a stop loss when you're entering in your order. It's just, you're not going to know what it is exactly. Kevin says, in my strategy, I find that stop losses actually reduce profitability. Well, certainly they will. But you need to have some metric that gets you out of the trade at a reasonable loss when you know that the trade is no longer going to go in your direction. So I would suggest that if the stop losses are actually reducing your profitability, there is something better there. It's just not what you're doing. I would imagine, at least, of course, I don't know your exact strategy, but there's probably a better way of doing things. Yeah, exactly, Dichester. It preserves your capital. It preserves your capital. I'm like slurring my words at this point. But as far as stop losses reducing your profitability, I mean, well, you should be looking at your profitability over like a long period of time, right? So it's not just on a singular trade basis. And that kind of information you can get from these back tests, of course. But My initial assumption would be that your stop loss criteria is just too strict. Which maybe it is, maybe it isn't. I mean, maybe it's just that you need to be able to survive like massive drawdowns on your trades. In which case, I would say, well, maybe that's maybe that's just not optimal to begin with. It's very difficult to say without knowing exactly what you're doing because it could be a lot of things there. But those are some things to consider, perhaps. Anyways, the amount of times prices come and tag the stop, then runs is a killer. Yeah, if that happens to you a lot, then the answer is very obviously your conditions are too strict. Your conditions are too strict. In fact, I mean, if that's happening, your real strategy should be enter on your stop loss and figure out a new strategy because whatever you're doing like could be optimized in terms of in terms of your initial entry. Um, 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 Use an emergency stop loss lower than the 𝗧𝗥𝗢𝗪𝗡 line. Yeah, I do like typically having some sort of a condition for what I refer to as an emergency stop loss, just like things have gone like a black swan has happened basically, and I need to get out immediately instead of waiting for whatever the fuck I'm waiting for because this is so far out of the realm of normality that we just need to close a trade and reassess because I mean, Corona's fucking happening or something like that, right? Um, any suggestion on a reliable auto trading bots? Kind of. I mean, obviously mine would be it. I would avoid I would certainly avoid any grid bot. I'd avoid most bots that you get like pre-packaged for you. Obviously, if everyone was using the same strategy or something very, very simple, like that's like if that fucking worked, then why would you why would you share that with someone else? Um, the reason why I do the things the way that I do with my own service is that it gives you a lot of customability so that multiple different people can have successful strategies without getting in each other's way. Of course, I do give out templates in the same way that you're seeing here. We actually have a shit ton in the Discord now, but it's assumed that anyone with a brain is going, or it's not assumed, it's directly said like anyone with a brain is going to, of course, further optimize these things. Yes, you can copy them at face value, and that might be fine for a while, sure, but you're eventually going to want to optimize these things, and even just small changes can produce better results for sure. Anyways, I'm just seeing how we're good on time here. We're about 4:20 right now. I know that Zhao typically wants me to end in like 10-ish minutes, and I realize that we have not done a single Q&A. So perhaps we should get onto that. I think we got through about 5 strategies here. So
What's up? What's up? What's up? I'm glad you put me in. Yeah, we're definitely gonna go to the Q&A part now. And before we go to the Q&A part, what's up, everybody? What's up, everybody? I see everyone's faces. I see a lot of people from the last workshops. I see people from the Whale School and Sniper workshops this week. It's great to see you guys out there. Just a reminder, Crown, just check with Elsie if she closed the door on the sauna. I don't want you to have a cold sauna. Just
did
a
you close the
reminder.
door?
And before we go to the Q&A and we go to some of you here and bring you guys to the spotlight. So we've been speaking a lot. Eric has been speaking a lot about all the strategies and automations, and it all comes together with a Crown Crypto Quant tool that is being shared on the description, sorry, on the chat right now on Zoom, or you find it in the lessons, and you have the code there for the 50% off on the first month. This is how do you actually backtest all these strategies and automate them in order for just make money while you sleep. Basically, that's exactly how it works. And also with this program, with this product, it also comes with a Crown VMP indicator and a bunch of other indicators that Eric has been talking about. This is the product that we're talking about. It comes with a whole course, but if you go down here, this is where you actually have all the tutorials on how to set up and a lot of spoon feeding strategies that just goes on and on and on and on. I don't know. I think trading can get easier than this, in my opinion. Quick reminder to tomorrow at 4:15 p.m. GMT plus 2, there's another Twitter Spaces, live EMA, and with some giveaways. We're gonna basically bring all the alpha from last week in crypto, bring some traders on stage, and also Bybit. Bybit is gonna join us on this one, and we're gonna give away some money, literally give away some money to you guys. And last reminder to, now that you reach the end of the course, now that you feel that you have a strategy, you feel that you know how to make trading work, you can really consider joining here the Bitfunded, which is the prop trading firm that we partnered up with. So basically, I mean, if you want $100,000 trading account, all you have to do is pay $600. And if you pass the challenges, there are 2 challenges with a maximum daily loss, a maximum loss, and a profit target. If you pass the 2 challenges, for $600, you unlock a $100,000 trading account. Now, can you keep the $100,000? No, but you keep up to 90% of the profits. So if you have a working strategy that, if you've done all the course and been in all the workshops, I think it's hard that you don't have one. This is definitely what I would say really good thing that you can do in order to amplify your capital. And also, before we go to the Q&A, reminder, this is the last workshop before Eric goes on the fight, on the crypto fight week in Singapore. If you are not following Eric yet, make sure to follow him on Twitter. I believe it's gonna be shared on Twitter, all the live stream to this fight. We're some of us are gonna be there. Definitely looking forward to this. Let's go. We're all rooting for you, Eric. Yeah, there you go. Kick that guy ass, Eric. That's I love
Hell
that.
yeah, man.
Hell yeah. Okay, cool. And we're gonna go now to the final part. Just do some Q&As. I know there's some people in this workshop that haven't gone through the course, so we want to bring people that have gone through the course now, who actually have questions about the course or simple mindset struggles, emotional struggles, like. So just raise your hand. You know the drill. There's already people raising their hands right now. So raise your hand on the bottom, turn your camera on. We want to see you, and let's bring Kevin, the first person here. Welcome, Kevin. Just click the button to unmute and welcome on stage. What's up?
Thank you. Can you guys hear me?
Yes, sir. Loud and clear.
Thank you. I just want to have a quick background to my question, but I just want to say thank you because your course is really, and this is now, I started in cohort 1, but I didn't really join cohort 2, but it's really unlocked like a whole different way, and in a way that suits me. You know, I started with Sniper about a year ago, and I've just been really struggling to actually become profitable. And I realized I'm a musician, and I'm too emotional, and I get into trades when I shouldn't, and all that kind of stuff. So I've realized that, you know, a couple of things I learned from you. The backtesting thing is key for someone like me. You know, like I need to prove to myself that this particular strategy actually is profitable. And then the second thing is obviously, you know, your point about the moving average or the trend being the most important part of any strategy. So after one of your sessions, I thought to myself, okay, I know I need to do backtesting, but can I see myself going on a spreadsheet and, you know, looking back 3 years on a strategy? I thought there's no chance in hell I'm going to do that. So let me learn to code. And about a week, about a couple of days of going through the Pine code scripting and everything, I started to be able to create very basic strategies. And I've created 3 or 4, some based on your input, but most of them just literally on the EMAs. Couple around, you know, the MACDs and the extension of MACDs and when to take profit and all that kind of stuff. And as an aside, your guy, the caretaker, his code is immaculate. Like I've looked at someone and thought, I'm here. His code is like,
He's a savant.
The roof, above the roof. So I just want to thank you for opening up my world to it and seeing something that really does help me, because I realized if you can get a profitable strategy, it can build confidence. So even if you take losing trades over the long term, you know, okay, it's proven. Obviously, the past doesn't guarantee the future, but the overall trend is in your favor.
Exactly.
So,
Yes.
you know, at the moment.
Man, I'm really happy to hear that. That's awesome.
Yeah.
Really awesome.
Yeah. Thank you. I mean, I wouldn't say my ROI and all the time I've spent learning to code has repaid itself yet, but I'm assuming it will, you know.
It's a superpower to have, honestly.
Especially, I mean, I wanted to learn like Python and what have you, but there's been no motivation. Whereas all of a sudden, Python scripting and there's been a massive motivation.
Yeah.
So thank you for that. And then I guess I have one question that maybe you can help me with. Before I get there, I realized why you call your strategy tester the skeleton. It took me a while to realize why you do that, because obviously it's the bones, and as a user you can put your own strategy on top of it. So
exactly, yes.
I was a bit slow, but now I get it.
It's actually a reference to Zelda, but that's the idea.
Yeah. Okay, but I'm sort of right in the way your approach is to create a tool that you put
precisely,
your own.
yeah.
Okay, cool. Yeah. Okay. But anyway, I'll join you in your private section at some point when I get to that level. But there's one question I do have. Because most of my strategies are literally based on the MAs. And you know, I've gotten to a point where I can choose the EMA, whatever, the hull, the simple. Is there a tool online or something that I might have access to where you can change your short and your long entry, like it automates a process, so you can push go, and then 2 days later it's run through everything and goes, okay, for you need the 27 short EMA versus the 100 EMA, for instance, on a particular strategy? Because I find I'll get, you know, I've gotten profit factors up to about 1.7 on the 15-minute, which is quite good, I think. But how do I know there's something that I'm missing? As almost I need to machine learn the EMA crosses. Do you know of a tool? Is it something you've done or can point me in the right direction?
Look, if you want to, if you're looking for a way to automate that, I have not found one. I'm not a programmer myself, but I do it basically just by trial and error, man. I go through, and when I want to test something, I will just sit there and back test every iteration, and that's just is the work, basically. So I'm not sure if that's exactly what your question was asking, but that's kind of what was coming to my mind as I heard you talk. So let me know if I'm on the right direction there.
The question, yeah.
Okay. Yeah. That's where the work is put in, really. The work is not, when it comes to trading, the work is not put in like sitting at your desk and getting ready to buy and sell. That's not it. It's the work is put in when you're testing your strategy. So that's where you can that's where you can kind of understand that, you know, I need to allocate my time resources towards, and that just is what it is. And I don't think that we've really found a better way to date.
Okay. It'd be useful if there was a tool. I mean, the more complicated your strategy, the less you are able to do it. But if I could get to a basis point where, like, my short and the long EMA has gone through X number of hours of the machine testing itself, that would help a lot. And then you can add the other stuff on top.
Yeah.
You know,
So basically what you're looking for is like a machine to test every combination of different moving averages. Gotcha. Yeah. Trial and error, man. I'm sure that there is. Look, I'm sure if we had like a team of fucking MIT engineers and programmers, they could figure out how to do that. But as of right now, you know, basically doing it in the way that we just spoke about is about as good as we can do.
Thank you. And
Absolutely,
I have also realized, you know, although it says the strategy gives you certain performance, you know, like on a theoretical basis. Yeah. There's a point where you actually do need to automate, because even now,
yes,
I'm kind of forward testing just manually. And like, even now I see myself failing that test because my emotions get involved. But you know, there is
That's
a kind
where the
of
automated
an
execution comes
entire
in.
yeah.
Okay, cool.
So anyway,
we're
thanks
gonna
some
move
more,
on.
and
Kevin,
thanks for
thank you for
Absolutely,
coming.
man.
Trust yourself.
All the best, Kevin.
I mean, all this thing about cron school and all this thing is removing yourself from the equation, just backtesting and automating. So just keep going for it and trust yourself. Let's try to attend as many people as possible. I see now that a lot of the people now asking to speak have already been on stage, so good to have you guys back.
There he is.
Welcome, sir. I forgot how to spell your name.
I
can't
think,
hear you.
yeah, I think your mic is off because you're not muted. I do want to address this question that I see here really quickly. Trong says, does the quant automation trading work on Blowfin? I think either it's this at the end of this week or at the end of next week. Their representative 𝗕𝗘𝗖𝗢𝗢𝗟 told me that they have gotten the integration, so it's very soon, within the next week or two.
Oh yeah.
Okay, can you hear me now?
Yes, sir.
Okay, I'm back.
Nice.
Well, I'm just gonna cut to the chase. I saw my equity curve last time I tried trading last year go down, and for the past month it's been going up.
I like this trend.
So I'm trading basically almost exclusively on the 15-minute time frame.
Okay.
I like it because I get no FOMO and I'm impatient and I get at least 1 or 2 entries per day.
Good. You have your preferences. It's good. Yes.
My alerts are the BWP under 33 or 35. It depends on my mood.
Okay.
And I set it up once per bar until it stops ringing at my phone. So it's so fucking annoying that when it stops, you feel like, oh, I'm at peace. I gotta trade because the shit's going up. And it allows me to free a lot of time because you don't have to wait, on the screen. You just know if I'm available, I take a trade. If I'm not, well, I'm gonna have another one in maybe 6, 7, 10 hours.
Yeah.
So it has a lot of upsides. On the on the downsides for people, that tried something like that, you do get some false signals because, but overall I'm 60% profitable. So it's
beautiful.
Pretty good. Also, I just correlated with the 1 hour and maybe a daily bias just in case to see, how's it going. But it's been pretty enlightening, actually. I'm really happy. I'm not afraid of take a trade, and I'm not afraid to miss a trade because I'm gonna have another opportunity right away. I try to avoid Sundays, and I try to shorten Thursdays. Like today, I have a short OP just going on. So thank you very, very much. In fact,
absolutely.
and I also, have a crack every time I watch your videos because you make me laugh every morning. But yeah, that's a plus. But I just wanted to tell everyone that you can find a strategy with this. It's very simple. You can try it in many time frames, but 15-minute time frame for those on the chat that talked about 9 crossing the 21. It's really, really good. You just gotta short. If you short from the underside of the retest of the 9, and if you long on the retest of the line of the 9 MA also, and that's gonna work.
Beautiful. I love it, man. You become like the authority of your strategy now. This is exactly the way it's supposed to be. Like you're using tools, you made them your own. Beautiful.
And you just avoided FOMO. It's amazing. If you don't get in the trade, it's okay. Just let it go. You're gonna have another one, and you don't have to wait a month. It's just 1 day, 2 days at most, and you get like a 12, 15, depending on a percentage, depending on the leverage, on your position size and everything. Some of the fees eat you up. I'm trading on Binance, right? Because I had my account open on Binance, but probably going to try Prime XBT. So cheers to everyone, and thank you very, very much.
All the best, my man. That's awesome to hear.
Okay, cool.
Hell yeah.
Thank you. Thank you for sharing the appreciation. We're going to go ahead, just ask if you have actual questions. We love the appreciation, but for the sake of keeping this interesting for as many people as possible. And we've got Dustin in the house now. We remember you with the samurai swords behind you. What's up?
So I know able to sort of give us an indication of when the top of the market will be. I mean, we've seen this at least 4 times, right? There's a top and then years, 1 year down and then goes up again. So I think for a lot of people who trade short term and a lot of people who hold some assets through the cycle, would there be an indicator when you think the top would be? And just as a follow-up, because I see some people, I won't mention names, right? But some traders who will put in a long and stay with that long for basically a year, right? Or so. I know you know some. You mentioned some on your channel, right? So, and these guys,
we all know about rand trades that have been going on for at least 10 years.
Or crypto, right? He puts in a long and then he just keeps on maybe raising his stop loss. How would you go about that kind of a strategy just for the long-term bags? I think all the questions here, I think we're quite clear with the 15, 30 hourly trading. But how about for those bags? What do we do?
Okay. So the best way to figure out when the market is actually topped, and this has worked since the dawn of time for Bitcoin, it will change over time. But the best way for Bitcoin is actually not an indicator. It's looking at the weekly trend. When the weekly trend goes from up to down, when you get a lower low and a lower high on the weekly, like a real lower low and lower high, almost always that's the end of your cycle. It's not going to get you out at the exact top, but this sort of like enter in at the exact low and exit at the exact top. This is like it's fantasy.
Yeah, that's impossible.
Yeah.
But I was just thinking, maybe plus minus 20% from, or even 30 is okay. Plus minus 20, 25% from.
Then yes, weekly trend will be your best bet there. That's the way that I define it, and it's treating me very, very well. Now, your other question of how do you get into like the God positions where it looks like it's super low and then price never even comes anywhere close to it ever again. So I happen to know the person that you're referencing, 𝗏𝗏𝗪𝗏, quite well. I consider him a really good friend. I love the guy. He's a great guy.
And crazy, I know
right? Yeah. He's really fun. He's actually.
I mean, if you put in $1 million on a position.
Yeah, he does some crazy stuff, but you have to understand 𝗏𝗏𝗪𝗏. First off, this guy, he probably has hundreds of millions of bucks, and so he has no problem. He'd probably say the same thing, but he has no problem just $1 million trade, and if he gets liquidated on it, it doesn't really mean much to him. He just goes a little bit lower, and he knows that eventually, I'm gonna find that low, and I'm gonna be in a great position. But of course, he's very comfortable there. Now, this is always relative, for someone who doesn't have hundreds of millions of dollars. Maybe like $100 position would be that same sort of thing, but you just have to realize like these sort of things, they're mostly for YouTube. They're mostly, very flashy, and it's like a marketing YouTuber, someone who's doing that. So I would say don't get wrapped up too much in that. It's a very difficult game to play. Most people will bleed out before really making a significant amount of money that way, and these are low probability things. So I would suggest it's not something to focus on, honestly. Okay. But yeah.
So you would say the first low of the weekly, and how do you exactly tell the low after like 3 candles? Would that be
So if you're looking for the reversal from downtrend to uptrend, well, we're actually not going to get on the low. We want to get on the second higher low. That's actually when we can actually get in. So I would argue that getting in at Bitcoin at like $15,000, that is a very risky position. But when it put in the higher low at I think somewhere around $20,000, that's a fucking phenomenal position. From like a trader's perspective, because you have a much higher probability of trend actually continuing in your favor at that point. But of course, you just missed out on, probably 20, 30% off of the low. A lot of people missed out on that. And, you can understand now that it wouldn't have been the worst do in the world if you got in at 20,000.
No, but I mean off the high. Let's say we reach 90,000 or 150 or even 270 or 250, whichever it is.
Mm-hmm.
When do we press the eject button?
that first lower low. Okay, there needs to be a lower high. You're not going to exit there. You're going to exit on the lower low that comes after that first lower high. That's where that actually can be done quite well with high probability. But you're going to be 20-ish% off of that high most likely.
It's fine. I mean, if you're here now, right, and if we're not trending downwards, if we break 70, then that's probably what we'd be looking for.
Yeah.
Okay, thank you very much, man. Appreciate it. And the course has been fantastic, man. It's absolutely
Glad to hear, my man. Hell yeah.
Let's go.
All the best, man.
Cheers.
Awesome. Thank you for coming on stage. Okay, guys, we're gonna bring one more person on stage. I see that we've got 𝗕𝗥𝗢𝗪𝗡 here and Eric. They've been on the stage before, but I want to give one last chance to one of you here on Zoom. I know some of you might be just on the edge of actually coming on stage. I see your faces. Like, this is really the moment. I would love to bring someone that has never come on stage. You might have a struggle. You might want to say, Eric, nothing makes sense. Your course is shit. You are welcome. So if anyone wants to come on stage, just raise your hand. This is your last chance. Just raise your hand here on Zoom. I'll give 5 seconds. 5, 4, 1. No one? Okay. Okay, I got it. Okay, cool. Let's go with Eric. Sir. The Eric sessions are recorded on YouTube, Juicy. What's up, Eric?
Can you hear me? Yeah?
Yes, sir.
Thanks for bringing me up. I'm sorry, 𝗕𝗥𝗢𝗪𝗡. I'm sure you had an awesome question. Just quick and simple, maybe we can get him in after me. About when you're recording your statistics, like for someone who doesn't actually have the crown automation or a bot who actually, it's not a who, but that actually does the trades for you and gets like almost at the entry or exit signals that you have set up. Like, how do you calculate how much percentage off or slippage, or I don't know how you call that, but how do you know like what your actual trading profitability is versus what the statistics show on the back testing? Or maybe like what I would like to know is like if the crown automation does that for you, like does it record your actual price you got in and how much? Because sometimes when you buy, like for example, $100, you will get like 90 at some price and then 5 at another price, and because the market is always moving. So like do you have like that comparison, or is that just something that you disregard because it's so little?
So we can get pretty close with the tool, but this is actually an order execution question in disguise. So when I enter into a position, even whether I'm doing it by hand or with a bot or whatever, I'm entering with a limit order. So that price always will be the same. So I can depend on that. There's not going to be any slippers. There's not going to be any difference. Like wherever I put that limit order in, that's where I'm getting filled or not getting filled, right? Like it's going to be that price though. That we know. So that's a given for sure. The exit, however, I find it's best to do a market order. And that's where you can get into a little bit of an issue where your execution price might be slightly different than, your ideal price, right? So to kind of smoothen it out, usually it's going to be pretty damn close. Like, unless if you're trading very big size. When I say very big, I mean above 1 million in contract size for Bitcoin specifically. If you're trading shitcoins, the liquidity is obviously going to be, it's going to be a lot less. So you might have issues with even like 1,000, right? Could be. But if you market order, Bitcoin and things are generally just kind of normalish, you might get like $5 of slippage at kind of like a moderate level, somewhere around 500,000 in contract size, but you're not going to get like a $20, $30, $50 slippage, like so you might get
really important. And for example, in the example that the other guy, I don't recall his name, but he talked about like not having to trade all the trades because you're in a 15-minute time frame. So if you're busy, you won't. And like, how would you also compare that? Like, how do you know that you're not missing the good trades and getting on the bad trades? And In the end,
Oh,
you're
you don't.
getting
You
your
don't. You don't. That's yeah, of course. Of
okay.
course, you don't know which trade is going to be a winner or a loser. I've fallen into some really bad habits in the past when I first got into automated trading because I would think like this next trade has to be a loser. You know, it's gonna be a loser, and it would be a winner again. And just there's in my experience, if the signals are there and you back tested those signals, you just have to play it out in the way that you've done it already.
So you have to get in 100% of the time, or you will get different
Yes,
probabilities.
because think about it, like that is what these statistics are showing you. You know, if you have a 60% strike rate, every trade that you take theoretically has a 60% strike rate. Like
Yeah.
even if you just had 10 wins in a row or 10 losses in a row, the next one is still 60%.
60.
So yeah. So you kind of have to be a little bit neutral in that sense. Now, of course, as you do things for a long time, you know, you might have a bit of an inkling that one position, you know, one setup is going to be better than the next one. It could happen for sure. Some people definitely feel that way. I'm not one of them, but you know, maybe you might notice something that's a little bit better. But probably what ends up happening is that introduce another indicator into the equation and you notice, okay, the trades seem to not work out when this condition is present on this indicator, but everything else is good. Something like that, you know, is what I typically see these kind of evolve into. Yeah.
Okay. Speaking of that, do you get the caretaker to get the DXY into the signals? Like,
Oh, you mean like Dixie, like put Dixie into the signals?
Remember, like we talked, I don't know if it was last week or 2 weeks ago, because last week you were sick, but I was asking you if you could like get another marker to.
Yeah. Okay, yeah, I spoke with him about that, and he said like this is it's with the way that trading view currently is, and like with the way that Pine script is, it won't work unfortunately. But it's a fucking good idea, man. Like that's so we're trying to figure out a way around it, but it for me. It sounds amazing, and I'd love to do it. I just don't.
I thought about like how the hash ribbons work. That it's actually, I think it's bringing data from another site.
Exactly. That's what he brought up. So he said like maybe
that,
he could build a database somewhere else and then pull that in, and maybe that could work. It's a big project, but you know, it's something that he's looking into now. So yeah.
Okay. Appreciate it, man. Thanks for
dude. All the best, man. All the best.
Okay, awesome. Eric, thank you very much for coming on stage. And that's it for this one. Eric, what are what are your last words of advice for this?
I really enjoyed this cohort. I really enjoyed the feedback that we got here. I've been trying to keep up with the comments as best as possible. I love the conversations that were going around. I really feel like we dialed this cohort in better than the prior one, and I'm going to use the information that I've learned here from you guys to hopefully make the next one even better. I loved just the level and depth of conversation, especially with the regulars, you know, asking questions. Really good stuff. Really good to see your guys' faces, and most importantly, I'm just happy to see that they're fucking doing it and doing it right and doing it well and really getting it. And that's just awesome, man. And I just want to continue to encourage you to do these winning behaviors because you're on the right track. And I think a lot of people, it really shows that a lot of people here have actually put in the work, and that's awesome to see. And just think in terms of years, like years down the road, you're gonna be so fucking good. You're gonna be so fucking good, and I'm just I'm just happy to see the start of this. So all the best to everyone. You know, it's a long career ahead of you, and it seems like a lot of us are really on a good step forward. So I'm just happy to see this, and I wish you all the best. And you know, if you want to join in on future cohorts, that's all good as well. You know, it'll be similar information. Maybe things get said in a slightly different way that makes maybe a little more sense in the moment. But of course, you know, if you just go on your own and we don't see each other again, I wish you the best, and we'll see each other hopefully at some other point.
And that's it for cohort 2 of Eric Crown. Remember, we're gonna come back with Eric with Crown School in October. Also, we were talking today about some really good improvement on the actual course so that we make it more friendly for all of you who want to backtest and automate the strategies into actual well, automation, right? So we are thinking on improving the school, and it's gonna probably come out in October in that new version. So keep your eye out for Crown School. It's getting better and better. The cohorts are gonna be here. You can always access the workshops. You can always access the course content. And if this is too advanced, well, that's why we have the other schools. Sniper School, you can't join. Well, you missed the opportunity. Whale School, you can still join. So if this was overwhelming, definitely consider the other schools. And up until then, stay strong and have an amazing weekend. Cheers.